Hello and welcome to Commodity Champions. I'm Manisha Gupta. And metals have seen a massive sell-off in the past 1 month. Zinc prices have slumped from more than $3,500 a ton on 26th of Jan to below $2,400 in this month. The prices are hovering near 24-month lows. Copper is also at a 6-month low, so is aluminum, and other metals like iron and steel have also met the same fate. So what is it that is hurting the prices? Joining me now to take this forward is Guy Wolf. He's Global Head Market Analytics at Marex. Guy, hi, thank you so much for joining us. And it has been quite a whirlwind of a month, the previous one. And I want to start with zinc because the underperformance really has come in from this metal, even as the fundamentals are not so bad. But what would you say, where would zinc prices see a support now?
Yeah, I think zinc is probably it actually represents a lot of what's going on in most base metals right now, which is that the macroeconomic environment is not strong enough in the here and the now to push prices higher. I think zinc is sort of somewhat unloved because it's not seen as a sort of a battery metal per se, even though it's very, very tied into the steel industry, which people typically see as cyclical. But I think all metals at the moment are suffering from, a degree of sort of hope and expectation that happened at the start of the year. Hopes for a sort of, as the Chinese reopen came through, that would lead to a sort of strong rebound in demand. And that hasn't really happened. Demand's been quite soft, combined with obviously a very, very different interest rate environment than we've had in recent years. So if you don't need the metal today, you're not going to buy it and warehouse it for a period of time because the cost of that now is just very, very different. So, really, it's just relatively short-term softness in demand, which is just leading to this sort of constant drip, if you like, of supply. Against that, there's actually sort of a very strong underlying sort of more medium-term story for most base metals, which is a sense of what people sort of got ahead of themselves on earlier this year, which is that all base metals, and I'd include zinc in that, because you're going to need a lot of galvanized steel for wind turbines and all sorts of things that we're talking about in this energy transition. But in general, whether it's copper, whether it's nickel, aluminium, zinc, they all are very much a key part of that sort of energy transition story, and demand should come through over the next few years. And combined with that has been relatively, almost no investment in new supply in metals like copper, and indeed zinc. Zinc's got a very strong supply side story as well. But we're just in a world right now where it's very, very sensitive to short-term fluctuations in demand because there's no real inventory buffer, and people don't want to hold metal that they don't need immediately. And so that's what we're seeing.
Guy, I get your point that almost all metals are important when we talk about energy transition, but copper, which is also called a doctor copper, has seen a recent sell-off. We've seen a 7-month low, and it hasn't come off its recent lows also. How are you looking at copper? Would you still refer to it as a doctor copper? And what is it telling you about the economic barometer or the kind of recession fears that the markets are looking at right now?
So I think, again, very similar pattern. Most people are very bullish on copper, sort of 2 to 3 years out. Again, no real supply coming through. Demand is predicted to carry on increasing, so that market is going to be in deficit fairly soon, and it takes a long time to bring new supply on. The problem is that that's not the same thing as being sort of in deficit today, right? And I think what happens is people sort of get ahead of themselves, get a little bit too excited about the sort of the 3-year outlook, get positioned on, but it's not like the equity market. Equities can price in future profits today, but commodities are ultimately going to be anchored for whatever's going on immediately. And I think that's really what we're talking about. We have not seen the pickup in demand out of China that people were hoping for out of lockdown. We have seen recently some slightly more positive signs coming out of the ferrous space and from the construction sector. But, China is not about to launch a new sort of wave of construction, that they clearly over-constructed, over-invested on that front. So I think it is, unfortunately, it's a little bit bland right now in terms of the demand drivers. There's no sort of big surge of demand coming through. And that's what's leading to the price softness we're seeing.
Guy, if you look at the copper prices coming off its all-time highs that we hit in the previous year, from where we stand right now, we are nearly $3,000 off from those kind of levels. What's your sense on the price moves from here?
Well, I mean, we've seen much higher prices in very recent periods. I think we're in an environment where it doesn't take much, for the market to sort of swing quite aggressively and sentiment to turn as well. So, I easily see copper above $9,000 a ton in relatively short order, because in the same way that people don't want to hold inventory if they don't need the metal today, it is also the fact that when they do need the metal, there's really very little inventory out there to supply them, and so they just will have to buy it at whatever the market price is in here and now. So it's really going to be the sort of mirror of what we're currently seeing. So I think when demand turns, prices will probably actually react pretty aggressively to the upside to that.
All right, $9,000 a ton for copper is not too far, but what's your sense on zinc, and what is the range you're expecting for it? Because this one is clearly oversold on the charts. We've seen 35% of decline from the highs in this year itself.
Yeah, so zinc is obviously, has been the weakest price performer. It's probably actually the one that's actually still got sort of a certain amount of speculative positioning in there on the short side. It's not hard for zinc to rally $500 a ton in a month, just on a relatively small shift in the underlying demand supply balance. So I certainly wouldn't be negative on any of the metals at these sort of prices. It's just the timing aspect of when to buy them.
All right. Moving on then, let's talk about aluminum also, because there have been output concerns from Europe because of gas, and then in China because of power concerns. Nickel as well is looking at strong fundamentals. Where do you see prices for both of these?
Yeah, so actually nickel, is actually probably one of the ones where there actually is supply coming through. As ever with commodities, the more excited people get about the future demand, typically the greater the supply response. And so whilst the sort of story and the excitement around demand for nickel driven by EVs is actually true, it was people were getting excited about that 5-6 years ago, and a lot of new supply is now in the market. But if you look at the breakdown of nickel demand, it used to be almost exclusively for stainless steel, and in the last sort of 5-6 years, electric vehicle battery demand has moved from about 10% of overall nickel to 40, nearly 50%. So it's not as though that sort of story and the underlying story is incorrect. It just has been met with supply response. And aluminium, to a certain degree, similar. It's one of those metals where there's quite often supply, simply because people, if there's excess power, people tend to smelt aluminium. So aluminium is one also where there's not a significant concern about a lack of supply. I think where those sort of factors are most acute is in copper, and actually zinc. It's just that people are more at the moment excited about copper. It's just seen as more of a sort of critical metal for the decarbonisation agenda, and zinc is almost ignored. But zinc also has, in terms of sort of the next sort of 5 years or so, a great supply side story, i.e. there's no new supply coming on.
All right, so you're saying that copper and zinc perhaps have more supply concerns than the other metals there. But many of these metals clearly have been reacting to the movement in the US dollar, the debt ceiling crisis in the US, and then other economic data which has been on the weaker side from US and China too. Would you say individual fundamentals on one side? It clearly has been the macro taking over that.
Yeah, I think China is always the biggest demand factor. So I think it's always the most critical. But the fact is also, we can't deny that the rest of the world also is going, and unsurprisingly, going to be going through economic slowdown, simply because the interest rate environment is just so fundamentally different. That whether we're talking about the US debt ceiling or not, the truth is that general households, having just gone through, an intense increase in energy costs, which has alleviated slightly recently, we're now seeing that coming through in food inflation, and obviously cost of debt, mortgages, and so on. So without a doubt, there's a squeeze on discretionary income, globally, and that's always going to have a slowdown and hit demand for metals. So, all these things are important factors for sure.
You told me earlier that you're not looking at China really rushing towards the infrastructure or real estate as a sector in that sense then, and because 40 to 50% of many of these ferrous metals are consumed by China, steel and iron ore prices, where do you see them headed? They're both trading at around 6 to 7 month lows. We've seen this year start on a weak note, and then we've further gone down from this.
Yes, again, obviously super sensitive to things like construction in China. Unsurprisingly, and again, China had seriously over invested in construction over the last sort of 10 plus years. New household builds have run miles ahead of new household formation, and so that has been, really over the next sort of 10 years plus. That's really the outlook there is very, very poor. Having said that, like everything will move in relatively small cycles, and like any government, you never want to see property prices collapse if they've run too far ahead. So what you sort of hope for is to sort of try and manage that, and gradually, hopefully, wages will increase and sort of solve that problem. So I think we've definitely been in a very, very weak period for demand for housing in China, but actually in the last sort of month or so, we have seen some small positive signs, pickups in some of the first-time buyer type data coming out of China. So it's not all doom and gloom, but this is not a new Chinese super cycle either.
All right. So if you had to recommend which metals to buy, one to buy and one to sell, which are those two metals that you would pick on both sides?
I think copper down here is definitely the best buy, because sentiment on that now is really being squeezed out, all the positive sentiment, but it will come back very quickly, I think, with positive price action. I think nickel, to be honest, is probably the one I favour the least, simply because there is a lot more supply coming through, and it will come through regardless of how quickly demand picks up. So I think nickel, even if we see a turn in the macroeconomic environment, is perhaps less geared to that than some of the other metals.
All right, so copper is favored the most and nickel the least, and that's exactly how we will go ahead in case of that sector. But let's also talk about the precious metal prices, Guy. How are you reading the impact of macros on gold and silver? Among the two, what would be your top pick here? Where do you also look at the dollar index moving from here?
Yeah, I think obviously gold's always going to be very, very dollar sensitive, but I think in a time where people have more macroeconomic concerns, obviously it has a sort of typically catches slightly higher demand. So I think again, hard to see why gold would be materially weak in the near term for those factors. Silver, though, I think is particularly interesting. I think that it's unappreciated as an energy transition metal. It's a major input, required input for solar panels, and as the sort of expected increase in demand for solar continues, it's becoming cheaper and cheaper and cheaper. That's going to have an increasingly large proportion of global silver demand. So I think silver is not just the sort of industrially sensitive precious metal that it used to be. People used to look at silver gold ratio as some people used to include silver within the industrial metals rather than even as a precious metal. But I think now that actually has a very strong underlying structural demand story from the decarbonisation agenda, which is seemingly what I find people don't talk about it anything like as much as they do with copper.
All right, so buying into gold and silver, also copper and zinc going forward. Nickel is the least favorite, is what Guy Wolf of Marex tells us. Guy, thank you as always for joining us on the show. And with that, we'll head into a short break. But coming back, we speak to Freddie Swan, who's Danish ambassador to India, on green energy transition, India's net zero carbon emission goals, and the need for climate financing.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything.
Now, leave encashment,
Gratuity.
and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere!
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
What if you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
Zedlac Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. You're watching Commodity Champions, and green energy and green efficiency are the two buzzwords dominating discussions among world leaders. Leaders will be gathering once again to discuss climate goals in Dubai later this year. India too is aiming to become net zero in carbon emissions by 2070. To discuss the key priorities on green goals and climate financing, I caught up with Freddie Swan, who's Danish ambassador to India earlier. I began by asking him about the progress on the net zero carbon emission goal countries are committing to look at, especially at COP26. Let's listen in.
You know, I have served as an ambassador for almost 10 years in India, and I have seen a huge progress, but also seen a huge determination really to move towards green growth and energy transition. And when I crisscross the Indian subcontinent, I see a strong will really to deliver on the very, very ambitious goals that your Honourable Prime Minister Narendra Modi put to the rest of the world back in Glasgow, COP26. Now we are entering COP28 soon, and I'm pretty sure that we will be able to see very substantial progress by India in that context.
I mean, as you said, there are various opportunities that India has displayed, but there have been challenges as well, especially for small to large-scale industrial projects. I'm assuming at different levels, many of them have faced one challenge or other. What's your sense on what are the challenges that need to be cleared or resolved right now?
There are a lot of challenges. It's not only for India, but it's across the world. One big challenge is, of course, that we are all looking towards big infrastructure projects and investments. But, you know, one important thing is that energy efficiency, as an example, is just a low-hanging fruit. And I'm happy I'm sitting here also with a company, the Danish major wind installation, Rockwool out here. They offer a lot of solutions that can help a lot of companies and a lot of small manufacturing units really to save energy and to really to be part of the green transition. So, of course, it's a humongous task, but there are opportunities. There are skills available also from Denmark. So let's take it into the scale of India. We stand ready, and Danish skills and Danish companies consequently are ready too.
You spoke about Rockwool, and well, yes, that's a Danish company. How would you see the company now helping in energy efficiency? I mean, I do understand that the company has a huge worldwide knowledge on the subject.
Yeah, but we are all facing tons of issues related to climate changes, and one issue is, of course, how do you secure better use, more efficient use of energy, and such a product that Rockwool is developing based on stone wool is a very important part of a trajectory that could reduce the consumption of energy. Then some critics will say, okay, when you do this stone wool, you use a lot of energy. That's true. But Rockwool is undergoing a transition where they're going from traditional melting towards electrically based melting. So that will also help to reduce both the energy consumption but also the CO2 footprint. And what we all need is decarbonization. And if you have a product that will be able to really reduce in 100 times the energy consumption because it was a good product to start with, it was less energy consuming to start with, then of course the longevity of such a product will be very, very important. And it's, it's not only about energy efficiency, energy consumption, it's also about fire protection, sound protection and so forth. So if you have products that will also improve the livelihood and be a kind of green contributor to a decarbonization, that's fantastic, and that's what this company Rockwool stands for, and I'm so happy to see what they have achieved over these many years. And India is a big opportunity for a company like Rockwool.
You talked earlier that there is a lot of determination in the Indian markets. We've seen a government push as well. There are subsidies and there are measures taken to ensure, even support the energy efficiency. But there is as much investments that you can make. How would you look at infrastructure kind of investments that you have seen? There is push from companies as well. How are you looking and how are you rating all of that?
I rate it very, very high, and let me give you an example. When I came to India second time back in 2019, Denmark and India, we decided really to launch a Green Strategic Partnership. And what that's about really connecting the missions of your Honourable Prime Minister as well as the Indian government to set new targets, a new trajectory for developing this huge nation. And then the skills from Denmark, being whatever technology we have developed, what kind of practice, experiences that we have gained over so many years. And today Denmark is a front runner in energy efficiency, in decarbonization, use of renewables and so forth. And of course it takes a lot of money, but the point is that it will serve a better cause, and there are also tons of jobs into that equation. So we need really to help and inspire India. And I'm pretty sure that government-to-government cooperation is, of course, a must. But when it comes to really to deliverables, then it can only be the private sector. And energy efficiency, as I said, is really a low-hanging fruit. And there are tons of opportunities for the Indian economy to grow on riding on a green transition and green growth. And therefore, Rockwool is a perfect partner in that trajectory. And these products are not that very expensive, so of course it takes some energy, as I said, in the production phase. But when you can use this product for year after year, and thereby also gaining the energy efficiency and so forth, then it's also very cost effective, and in fact it's also negative in the CO2 footprint. So in fact you take out CO2 from that process, and then it's contributing to India's future green growth trajectory. And with all the ambitions and targets that your Honourable Prime Minister has launched in Glasgow, I'm pretty sure we'll see even more in Dubai when we have COP28, then you will see a huge change, not only of India, but also of the world, and we need that.
Well, absolutely. And you talked about the importance of the private trade getting into this as well. So what's your sense? What kind of tie-ups, what kind of conversations are you having with the private companies in India, one? And second is, you mentioned COP28 as the thing to watch out from here. Any agenda, and what would you especially be looking forward to?
Let me take the last question first. COP28, we have to deliver. I mean, the last COP27 in Egypt was, of course, a kind of a stepping stone from COP26, and now we are going to COP28. But we do it riding on the hopeful contributions from the Indian G20 presidency. We need money, we need green financing and so forth, and we need to adapt all the international financing institutions like the World Bank, IMF and so forth, really to be adapted to the challenges that we are facing when it comes to the climate changes. But we also have to deliver on the Sustainable Development Goals of the United Nations. So there in Dubai, I hope to see really tangible success and tangible progress that will provide sufficient finances for the green transition. And hopefully we'll also see a lot of green financing being put towards, or in a more direct way, to the SMEs, or whether it's in India, whether it's the rest of the world, Africa and so forth. So that's important. As to the first question related to the private sector and so forth, government-to-government cooperation can only set the targets and set the direction. When it comes really to deliver on energy efficiency, you need to have companies who have developed the technologies, who have put money into developing innovative solutions and so forth. And in our daily interaction, both with the Danish companies but also with the Indian companies, we are trying really to secure that we can find the platform so this private sector, through their interventions, through their investments, will be able really to change whatever is needed in order to cope with the climate changes. I'm pretty sure I've met many Danish companies, of course, but also many Indian companies who are really investing heavily in the green transition. So what we all need is a green, strong, sustainable India, and that can only come through really business-to-business cooperation. And Rocksoul is such an example. It's a low-hanging fruit. So if you are looking for solutions that will help you coping with all these challenges, then this company, this product, as an example, is the way forward.
All right, we hear that. So the green transition with green efficiency will come with green money. The governments are working together, but of course the private sector will have to start chipping in quite soon and quite in a big number there. Well, that's all the time that we have on this edition of Commodity Champions. Thank you so much for watching.